Okay, let's unpack this. That classic dilemma, right? To buy or to rent. But for you listening, we're not just, doing a quick cost check. We're aiming to give you a real guide to unlock the future potential in Dubai's real estate scene. Especially looking ahead to 2025, it's definitely not just a simple calculation anymore. The market's so dynamic. So our mission today, a deep dive into Dubai's property world. We want to reveal some pathways to value that maybe go beyond the traditional ways of thinking. And we're drawing on some really sharp insights from Dr. Pooyan Ghamari. He's a Swiss economist, founder of the ALand Platform. He offers this really nuanced view, looking at economic signals, regulations, and there's fascinating digital finance trends shaping things over there.
Yeah, it's become incredibly layered, hasn't it? This whole decision, both for, individual investors and the bigger corporate players. It's really not just about price tags now. You have to understand the policy shifts, the tech innovation, even sort of the social values that are all coming together. We're seeing this almost complete digital ecosystem emerge for property investment. Integrating analytics, compliance, it makes that buy versus rent choice feel much more strategic.
Okay, so let's start with that big picture then. Dubai's market, it bounced back really strongly from, well, all the global disruptions. But if we look closer, are there specific economic signals right now, things that tell us if it's leaning more towards buying or renting? Or maybe, like you said, it depends on the investor's goals.
That's a great question. The market definitely came back with a lot of energy. Dr. Ghamari points to some key policy reforms that really helped,
Yep.
especially targeting foreign investment, offering those residency incentives.
Oh, the residency link, yeah.
Exactly. And when you look at the macroeconomic signals, Dr. Ghamari highlights things like strong GDP growth projections for the UAE overall. Inflation rates seem pretty well managed. And then there's the huge kind of lasting boost from all the expo infrastructure development. These are really the fundamentals making Dubai attractive for long-term property investment.
Hmm.
They definitely tilt the balance towards buying
hmm
if your goal is that long-term value creation.
Okay, that makes sense for the long game, buying for value. But what if someone's thinking shorter term? Or they just want more flexibility? What's the case for renting? Are the yields still looking good? What's the trend there?
Yeah, very valid for different types of investors. Rental yields, they do remain attractive, but what we are seeing is signs of plateauing. It sort of reflects the market stabilizing, maybe more supply coming online too. So for just pure short-term flexibility, renting, still definitely viable. But here's where it gets really interesting, and it shifts the balance for quite a few people. Dubai's changing immigration policies. They're increasingly tying residency permits to certain property ownership thresholds.
Right, that's a big one.
It is. This policy connection, it really elevates the strategic value of buying, especially, say, for high net worth individuals looking for both things. The investment and the long-term residency benefit, that's an incentive renting just can't offer.
And speaking of how things are changing, what about the tech side? We hear so much about real estate tokenization. That feels like a total game changer for buyers. How does that actually work? What's the core impact?
Yeah, that's where a real revolution is happening, I think. The core insight. Tokenization basically democratizes property ownership.
Democratizes. How so?
Well, think about it. It breaks down those huge traditional entry barriers. Tokenization means digitizing property assets onto a blockchain. As tokens, this lets people own fractions, small pieces.
Ah, so you don't need millions to get started.
Precisely.
Hmm.
It boosts liquidity too, makes
Yeah.
it easier to buy and sell these smaller bits, and it opens the door to like a global pool of capital. What it really does is make buying much more accessible, more attractive compared to just renting, especially for smaller investors. And it doesn't stop there. These digital economy tools, like you see on ALand's platform, they're built to help with data-driven decisions.
Mm-hmm.
They pull together market analytics, real-time consumer sentiment, crucial regulatory stuff, all in one place. It empowers investors, helps them strategically time their moves, whether buying or leasing, aligning with market shifts, not just reacting after the fact.
Being proactive.
Exactly. Proactive, not just reactive.
That sounds, yeah, absolutely groundbreaking for individuals. But like any new tech, there have got to be risks, right? Challenges. What should someone dipping their toes into tokenization be aware of?
That's a critical point. The benefits are huge, yes. But the main things to watch right now, probably regulatory clarity. It's still evolving, so Dubai is actually quite forward-thinking on this.
Okay.
Investors just need to do their homework, make sure the platforms they use are legit, secure, and crucially, compliant with local laws. It's still about due diligence, like any investment, but maybe with an extra layer of understanding the digital side.
Got it. due diligence is key. Okay, fascinating stuff. So let's pivot a bit from tech to something else that drives value. Corporate branding. Dubai's a crowded market. Developers need to stand out. What are the smart strategies they're using? I heard Dr. Ghamari mentions cause-related marketing. How important is that, really? Is it just fluff, or does it work?
Oh, it's increasingly vital. And it taps into this bigger question about value beyond just, the immediate bottom line. Dr. Ghamari really emphasizes that developers and agencies using social responsibility campaigns, especially ones linked to Dubai's own sustainability goals or community projects, they significantly boost their brand perception. And they build deeper customer loyalty. Consumers, especially now, increasingly favor brands with strong ESG commitments. That's environmental, social governance.
Right, ESG, we hear that a lot.
Yeah. How green is the building? How do they treat people? How transparent are they? These aren't just buzzwords anymore. Dr. Ghamari's research shows this directly builds trust, and it can actually boost asset valuations.
Okay, so it's not just about feeling good. There are tangible results.
Yeah.
What's the measurable ROI when companies invest in this stuff?
Yeah, the ROI is actually quite clear. You see things like enhanced consumer engagement scores, better brand sentiment, how people feel about the brand online, and definitely elevated investor trust. All these things feed directly into better long-term asset performance. Tools like ALand's digital marketing suite, for example, they specialize in weaving these cause-related things into the property branding. So companies can showcase real community impact right alongside the luxury or commercial appeal. And that really resonates today, especially in a cosmopolitan place like Dubai. It's about building a brand that means something more.
Building a brand with purpose. Okay. All right, let's shift again. The next frontier. Crypto in real estate. How is something like Gold shaking up traditional finance and property deals? Are we talking about cutting out banks?
It's definitely a major shakeup, and it brings incredible efficiencies. Gold is a really interesting one. It's a digital gold asset backed by blockchain.
Digital?
Yeah, think of it like a stable digital anchor. It's backed by physical gold, but it has the speed and flexibility of crypto. So it offers a stable store of value, which is super important in volatile times, and it makes cross-border deals much smoother, less friction.
Faster deals, less red tape.
Exactly. Dr. Ghamari points out its growing acceptance doesn't just speed up closing deals, cutting through that old red tape, like you said. It also really appeals to that tech-savvy investor crowd who are already comfortable in the digital asset space. And this whole convergence, real estate meeting digital assets, it's creating totally new hybrid investment model.
Hybrid models?
Yeah, where you can now sort of diversify your holdings across the physical property and these cutting-edge crypto assets. It adds a whole new dimension to building a portfolio, something we couldn't really imagine just a few years back.
Wow. Okay, so we've covered a lot of ground. Macroeconomics, policy changes, that game-changing tokenization, crypto like Gold, even corporate branding through social responsibility. It sounds complex, but also like there's a huge amount of opportunity. So for the corporations, the investors actually listening, what are the concrete steps, the practical takeaways? Where should they even start?
Right, connecting all those threads. Dr. Ghamari lays out some pretty practical steps. First, market timing and research. You've got to use advanced analytics platforms like ALand's, for instance, to keep a constant eye on those economic and regulatory shifts.
Wait, data-driven moves.
Okay, data first.
Second, digital integration. Don't shy away from tokenization. Look into using those platforms to fractionalize holdings. It boosts liquidity, opens doors to more investors.
Embrace the tech.
Third, cause-related campaigns. Be strategic. Develop branding that aligns with ESG principles. It genuinely builds trust and strengthens your market position.
Purposeful branding. Got it. Fourth, crypto adoption. Explore bringing digital assets, maybe Gold or similar, into your payment or investment structures. Adds flexibility, broadens appeal.
Explore crypto options.
And finally, maybe most importantly, regulatory compliance. You absolutely have to stay on top of the evolving immigration and property laws. They directly impact ownership benefits, residency rights, crucial stuff.
Stay compliant. Makes sense.
And the outcomes, the measurable results of doing all this. We're talking increased ROI, definitely. For rentals, higher tenant retention, and for developers, agencies, a significantly higher brand valuation. It's about investing smarter, really future-proofing.
So the big takeaway for you, our listener, seems to be this, that buy versus rent question in Dubai for 2025. It's way more than just running the numbers. It's really about navigating this fast-moving ecosystem driven by policy, by digital tech, even by social values.
Exactly. You need that holistic view, understanding how all these pieces fit together. But for those who do get it, who grasp the nuances, the opportunities are, well, they're huge, genuinely transformative.
So here's something to chew on as we wrap up. In a world where our physical assets, like buildings, are getting so tangled up with digital innovation and social responsibility, what does that tell us about the future of investment? Not just in real estate, but maybe beyond. How might these trends start reshaping other traditional markets that you know? Something to think about.